Did you know that Canada could face its biggest economic collapse in 2026? That's not just a wild prediction. It's backed by alarming facts that could change your financial future forever. With record levels of debt, a volatile housing market, and a global economy on the brink of disaster, the signs are clear. The storm is coming. But the big question is, are you prepared? In the next few minutes, we're diving deep into the 10 hidden risks that could bring Canada's economy crashing down. From skyrocketing inflation to job losses and even bank failures, this isn't a fear-mongering theory. These risks are real, and they could impact your job, your savings, and your way of life. Stay tuned, because by the end of this video, you'll know exactly what's at stake and how to protect yourself. The clock is ticking. Don't let this economic collapse catch you off guard. Number 1. Over-leveraged housing market. Canada's housing market has been on an upward trajectory for years, but it's a bubble that many believe is ready to burst. With skyrocketing property prices, Canadians are carrying an overwhelming amount of debt. Right now, the average household debt in Canada is one of the highest in the world, and this could be the ticking time bomb that triggers a financial collapse. As interest rates continue to rise, more and more Canadians will struggle to keep up with mortgage payments, leading to a potential wave of foreclosures. If the housing market crashes, millions of people could see their home values plummet, leaving them underwater with debt they can't repay. The government and banks have been fueling this housing boom, but the consequences are beginning to show. Over-leveraging, taking on more debt than one can realistically pay back, is becoming an increasing concern. As more people max out their credit and take out risky mortgages to afford overpriced homes, the entire economy becomes vulnerable. If these trends continue, we could be facing a situation where the housing market's collapse pulls down the entire economy with it. And when people lose their homes or are unable to sell for a profit, it doesn't just affect homeowners. The effects ripple across businesses, job markets, and other sectors. What can you do to protect yourself? First and foremost, take a closer look at your finances. If you're over-leveraged, now might be the time to make adjustments. Start by paying down high-interest debt. Consider refinancing to lock in a better rate, or if possible, think about selling a property that may no longer be a sound investment. This situation isn't just a concern for real estate investors. It could impact anyone with debt tied to property. The best way to safeguard your future is to act before the housing bubble bursts. Number 2. Skyrocketing debt levels. Canada's debt levels are reaching dangerously high levels, and this could be one of the key factors driving the country toward an economic collapse. As of recent reports, Canada's national debt has surpassed $1 trillion, and the government is borrowing at an alarming rate just to keep up with rising costs. While the country has historically managed its debt, the current trajectory is unsustainable. When debt levels grow faster than the economy itself, it creates a massive vulnerability that can trigger a financial crisis. With interest rates on the rise, the burden of servicing this debt becomes even more burdensome, and the risk of default increases. What's even more concerning is the personal debt Canadians are carrying. Household debt has reached levels unseen in modern history, and many individuals are living paycheck to paycheck, dependent on high levels of borrowing to maintain their lifestyle. As interest rates climb, paying off loans, mortgages, and credit card becomes harder for ordinary Canadians. This combination of personal and national debt sets the stage for an economic downturn. If Canadians can't repay their debts, it will lead to widespread defaults, bankruptcies, and a cascading impact on businesses, housing markets, and job security. The key to avoiding the worst-case scenario is taking proactive steps to reduce reliance on debt. If you're struggling with high-interest loans or credit card balances, focus on paying them off as quickly as possible. It's also a good idea to diversify your investments, as the government's financial situation can directly affect markets and inflation. Keeping an eye on fiscal policies and understanding how national debt affects your financial future can help you stay ahead of the crisis. The sooner you act, the better prepared you'll be when these economic pressures start to hit harder. Number 3. Global recession impact. Canada's economy is deeply intertwined with the global market, and a potential global recession could hit harder than many expect. While Canada's economy has been relatively stable in recent years, the international economic landscape is far from secure. Major economic powers, including the United States and key European nations, are facing increasing financial struggles. With the global economy already showing signs of strain, it's only a matter of time before these challenges ripple into Canada. Trade disruptions, declining exports, and a slowdown in international investment could severely affect the country's economy, resulting in widespread job losses and economic contraction. The interconnectedness of the global economy means that when other countries falter, Canada's industries feel the consequences. Canada's export-driven economy, heavily reliant on natural resources like oil, minerals, and agricultural products, would suffer immensely if demand for these goods drops. With key markets such as the U.S. and China facing economic downturns, Canadian businesses may struggle to maintain profits or even stay afloat. This could lead to a sharp decline in the Canadian dollar, further destabilizing the financial system and causing inflation to rise even higher. For ordinary Canadians, this means increased costs of living, fewer job opportunities, and a shrinking economy. To protect yourself from the impact of a global recession, it's important to diversify your financial portfolio. Relying on a single source of income or a limited set of investments could leave you vulnerable in uncertain times. Consider shifting towards industries that are less dependent on global trends, such as technology, healthcare, or renewable energy, which are more likely to remain resilient. Moreover, strengthening your emergency savings and minimizing debt will give you a buffer when the global financial storm inevitably hits. Being proactive now will help you weather the coming economic challenges and safeguard your financial future. Number 4. Job losses and rising unemployment. One of the most immediate and worrying effects of an economic collapse is the surge in job losses and rising unemployment rates. The pandemic has already disrupted the job market, and Canada is still feeling the long-term effects. Many sectors, especially those reliant on traditional industries like manufacturing, retail, and hospitality, have been hit hard, with many workers unable to return to their previous roles. But the real danger lies in the growing influence of automation and artificial intelligence. As these technologies evolve, many jobs that once provided steady employment are at risk of being replaced by machines, creating a crisis in the job market. The impact of widespread job losses doesn't stop at individuals. It affects the entire economy. As people lose their jobs, they spend less, which means businesses make less money. This leads to a domino effect where companies cut back on hiring, reduce wages, or even shut down entirely. The Canadian economy, which has traditionally relied on a strong middle class, could see a significant erosion of that vital economic engine. With fewer people earning a paycheck, the tax base shrinks, and the government may struggle to fund important services. This cycle of unemployment and economic contraction can drag the country into a deeper financial crisis, one that could last for years. So, what can you do to protect yourself from this growing threat? Upskilling and reskilling are key to staying competitive in the job market. Focus on learning skills that are in high demand, especially in technology, healthcare, and green energy sectors. These industries are expected to grow, even in tough times, and they offer long-term stability. It's also important to diversify your income. Having multiple income streams, whether through side gigs, investments, or freelance work, will provide a financial cushion if your primary job is at risk. Taking proactive steps now will ensure you're prepared for any job market shifts that come your way. Number 5. Inflation and the cost of living. Inflation is already making life harder for Canadians, and if the economy takes a turn for the worse, things could get even more difficult. Over the past few years, inflation has been steadily rising, causing the price of everything from groceries to gasoline to skyrocket. What's alarming is that this trend shows no signs of slowing down. As inflation continues to erode the purchasing power of Canadians, the cost of living will keep climbing, making it more challenging for families to make ends meet. For many, wages simply aren't keeping up with rising prices, and the pressure is mounting. The combination of higher prices and stagnant wages is a recipe for financial disaster. People are being forced to spend more of their income just to cover basic living expenses, which leaves little room for savings or investment. Meanwhile, the government's attempts to control inflation, such as interest rate hikes, could further strain household budgets. As interest rates increase, loans, mortgages, and credit card payments become more expensive, making it harder for Canadians to stay on top of their debt. In extreme cases, some may even face bankruptcy or foreclosure as they struggle to keep up with rising costs. To navigate this challenging environment, it's crucial to take steps to protect your financial health. One of the best strategies is to reduce your discretionary spending. Take a close look at your monthly expenses and identify areas where you can cut back, such as dining out, subscriptions, or unnecessary shopping. Additionally, consider investing in more self-sufficient practices, like growing your own food or adopting energy-efficient solutions to reduce utility costs. Finally, building an emergency fund and ensuring that your savings are in investments that outpace inflation will provide a financial buffer, helping you weather the storm ahead. By acting now, you can shield yourself from the worst effects of rising inflation. If you're finding this video valuable, don't forget to hit that subscribe button. It's just one click, but it helps us continue putting in the effort to bring you insights like these. We'd also love to hear your thoughts. Drop a comment below and let us know how you're preparing for what's coming. Number 6. Corporate debt crisis. While much of the focus in economic discussions is on personal and national debt, the mounting corporate debt crisis in Canada could play a critical role in triggering an economic collapse. Many Canadian businesses, especially large corporations, have been taking on more debt than ever before to fund expansion or weather the pandemic's impact. While borrowing can fuel growth in the short term, the longer it continues, the more vulnerable companies become to rising interest rates and a slowing economy. As businesses struggle to service their debts, they may face bankruptcies, layoffs, or even closures, all of which would worsen the country's financial troubles. Corporate debt isn't just an issue for the companies directly involved. It creates a ripple effect throughout the economy. When large corporations face financial strain, they often cut back on investments, reduce wages, or halt hiring. This reduces overall economic activity and leads to further job losses, which only exacerbates the problem. Additionally, the financial sector, which often holds significant stakes in corporate debt, could suffer massive losses if these companies default on their loans. This could lead to a crisis of confidence in the banking system, destabilizing the entire financial infrastructure of the country. To protect yourself from the fallout of a corporate debt crisis, it's essential to keep an eye on the financial health of the companies you're invested in. If a business is heavily in debt, particularly in sectors vulnerable to a downturn, it could be at risk of collapse. Diversifying your investment portfolio is key. Consider moving into more stable, less debt-dependent sectors like technology or renewable energy. Additionally, stay informed about corporate earnings reports and news that might indicate trouble ahead for major companies. By staying proactive, you can safeguard your financial future in the face of an impending corporate debt crisis. Number 7. Bank failures and financial instability. As Canada's financial system faces increasing pressure, the possibility of bank failures and widespread financial instability is becoming a serious concern. Banks are the backbone of the economy, holding the savings of individuals, facilitating business loans, and ensuring smooth financial transactions. However, with rising debt levels, an uncertain housing market, and the threat of a global recession, the stability of Canada's banking sector is at risk. If one of the country's major banks were to fail, it could trigger a domino effect, leading to a loss of confidence in the entire financial system. This could lead to a run on the banks, where people rush to withdraw their money, causing further chaos in the economy. Bank failures don't just affect the institutions involved, they can cause massive disruption for ordinary citizens. If a bank were to collapse, depositors could lose their savings, especially if their money exceeds the insured limits. Beyond individual losses, the larger economy would suffer. A failure in one bank could spill over into others, as interbank lending, which is crucial to the financial system, could freeze up. This could lead to credit shortages, where businesses and individuals are unable to access loans, further slowing economic activity and potentially leading to a recession. The longer it takes for the financial system to recover, the deeper the economic damage becomes. To shield yourself from the potential fallout of bank failures and financial instability, consider spreading your wealth across multiple financial institutions. Make sure you are aware of your deposit insurance limits and consider diversifying into assets that are less reliant on the banking system, such as precious metals or real estate. Additionally, keeping an eye on financial news and the health of major banks will give you a heads up on potential risks. By being proactive, you can protect your assets and avoid being caught off guard by a sudden banking crisis. Number 8. climate change and natural disasters. The threat of climate change is not just an environmental issue, it has deep economic implications for Canada. Extreme weather events such as floods, wildfires, and severe winters have become more frequent and intense in recent years. These natural disasters not only cause loss of life and property, but also have a crippling effect on the economy. In 2021 alone, Canada faced unprecedented flooding in British Columbia, costing billions in damages and disrupting key supply chains. As climate change continues to accelerate, these kinds of disasters could become more common, further destabilizing the economy and pushing vulnerable regions into financial distress. In addition to direct damages, the broader economic impact of climate change is enormous. Agriculture, which is a vital part of Canada's economy, is particularly at risk from shifting weather patterns. Droughts, heat waves, and unpredictable storms can devastate crops, leading to reduced food production and higher prices. The Canadian insurance industry is also facing massive payouts from climate-related damages, leading to rising premiums for homeowners and businesses. If climate-related events continue to disrupt critical industries like agriculture, forestry, and energy, Canada's overall economic stability will be threatened, with lasting effects on jobs, income levels, and even national GDP. So, what can you do to protect yourself from the economic fallout of climate change? First, consider diversifying your investments into climate-resilient sectors, such as renewable energy, sustainable agriculture, and green technologies, which are less vulnerable to natural disasters. Additionally, strengthening your emergency savings and ensuring that your property is adequately insured against climate risks will help you weather the storm. While we can't control the weather, we can control how we prepare, and being proactive now can protect you from the financial impact of climate change in the future. Number 9. Political instability and policy shifts. Political instability and sudden shifts in government policies can have a profound impact on a nation's economy, and Canada is no exception. Political uncertainty, whether through elections, policy changes, or leadership transitions, can create an unpredictable environment for businesses and investors. When the government's direction becomes unclear, it leads to hesitation in both domestic and international markets. Companies may delay investments or expansion plans, and foreign investors might pull back, fearing instability. This hesitation can slow down economic growth, reduce job creation, and dampen consumer confidence, all of which can trigger or worsen a financial crisis. Furthermore, major policy shifts, such as changes in taxation, trade agreements, or environmental regulations, can have far-reaching consequences for various sectors. For example, a shift toward protectionist policies could harm Canada's highly integrated trading relationships, particularly with the United States, its largest trading partner. Similarly, significant tax hikes or drastic changes in labor laws could increase the burden on businesses, causing some to cut back on hiring or even relocate abroad. For individuals, new policies could increase the cost of living or limit access to important services, further exacerbating economic challenges. To safeguard your financial future amidst potential political instability, it's crucial to stay informed about current events and government policies that could affect your industry or investments. Diversifying your investments across different regions and industries can help minimize the impact of political changes on your wealth. Additionally, maintaining flexibility in your career or business strategies will allow you to quickly adapt to new policies or market conditions. In times of political uncertainty, it's essential to think long-term and prepare for potential shifts that could have major financial consequences. Number 10. Lack of innovation and declining competitiveness. As the global economy rapidly shifts towards innovation-driven growth, Canada faces a critical risk. Its reliance on traditional industries like natural resources and real estate could leave it vulnerable in the future. While these sectors have sustained the economy for decades, the world is evolving, and countries that fail to diversify into tech, green energy, and other future-focused industries risk falling behind. Canada, despite its strengths, has not been as aggressive in fostering innovation compared to other nations. Without significant investment in research, development, and emerging technologies, Canada's global competitiveness could decline, which would ultimately affect its economic stability. The failure to innovate could manifest in multiple ways. For one, if Canada doesn't adapt to global trends, It could face slower economic growth and higher unemployment as industries like oil and gas, which have already been under pressure from environmental policies, continue to shrink. The manufacturing sector, which has been eroding over the past few decades, might continue to struggle without adopting cutting-edge automation and digital technologies. The lack of a strong technology sector to offset the decline of traditional industries means fewer job opportunities and a greater dependence on external markets for innovation. This stagnation could lead to a future where Canadians are not equipped with the skills or opportunities to thrive in a rapidly changing global economy. To protect yourself from the risks of declining competitiveness, it's crucial to embrace innovation in your personal and professional life. Focus on learning skills that are in high demand, such as digital marketing, coding, or artificial intelligence. Investing in innovative sectors like clean energy or technology will not only help you stay relevant, but also secure your financial future. Furthermore, diversifying your investments into global markets can provide exposure to industries and countries that are leading the way in innovation. By positioning yourself at the forefront of change, you can navigate the shifting economic landscape and ensure that you're prepared for what's ahead. As we've seen throughout this video, the risks of a major economic collapse in Canada by 2026 are very real, and the clock is ticking. From the over-leveraged housing market to global recession impacts, the road ahead could be bumpy for millions of Canadians. But it's not all doom and gloom. Taking proactive steps now can make all the difference in protecting your financial future. Whether it's paying down debt, diversifying your investments, or preparing for job market shifts, the actions you take today can shield you from tomorrow's economic storms. Now, it's your turn. What do you think about the risks Canada is facing? Have you started preparing for the potential economic collapse? Or are you concerned about how these factors might affect you? Drop your thoughts in the comments below. We would love to hear how you're planning to protect your finances in the coming years. If you found this video helpful, make sure to subscribe to our channel. We put a lot of effort into creating content that keeps you informed, and your support means everything to us. It's just one click, but it goes a long way in helping us continue bringing you valuable insights. Thank you for watching, and stay ahead of the curve.